Hello, everyone. Hope you are going okay with the remote learning so far. So, today I thought I'll just record my voice and give you a little bit of explanation over the PowerPoint Google Slides as well. So, today we are going to do exercise 6.3, that is reducing balance depreciation. So you have done depreciation in 6.1 and 2. So as you have done the flat rate already. So the flat rate is the one in which there is a fixed amount every year that's been deducted from the actual value. So depreciation is the value of the, like for example, if you have purchased a car and after 5 years, if you sell it, you won't be able to sell that at the same price what you got it for. So that's a depreciation because it's depreciating every year. So today, looking at the reducing balance depreciation. So for the warm up, I would like you to go to the Google Forms and complete those two questions. And after that, some keywords we will be using in this lesson. So one of them is preceding. Preceding means before, like preceding years, it means the last year, and something in order, position, or time coming before. And then asset is a useful or valuable thing or person, for example, a car, a house, things like that. So reducing balance depreciation, so how it is different from the flat rate is it calculates the future value of an asset by reducing it every year by a fixed percentage of its value in the preceding years. So we calculate it not by deducting a fixed value every year, but a percentage of a value every year. So it will make more sense when we'll do the example. So as I was telling you, with the flat rate, the percentage each year is of the purchase price. So it's the same dollar amount every year. For example, it's 8% of the original value. So then you just deduct 8% every year. But in the reducing balance depreciation, you reduce it every year by a fixed percentage of its value from the last year. So what it means is, if you look at this example, a business purchased a photocopier for $10,000 in 2014. It is depreciated using reducing balance depreciation at a rate of 18% per annum. So give all answers to the nearest dollar. So you need to complete that table. So the original price, the purchase price was 10,000. So you can see it's a $10,000, and then the depreciation rate is 18%. So, for calculating that how much it will be depreciating, so you just do 18% of 10,000, which is 18 divided by 100 times 10,000, which is equal to 1800. So it means after the first year, the value depreciated would be that original value, which was 10,000, take away the depreciated amount, which is 1800. That comes up to 8200. So if that would be a flat rate, you just keep on deducting 1800 all the time. But this is a reducing balance. So what is going to happen next year? You take that 8200 here and do the 18% of 8200. So what it means is something like this. So you can see the first one is 1800, and then the next year we do 18% of 8200. We are not going to deduct 1800 all the time as we used to do in the flat rate. This is reducing balance. So that's why it's known as reducing balance, because it's reducing in balance every year. So second year, it would be 18% of the first year amount. So then you deduct $1,476 from 8,200, which is 6,724. So now next year, you would be doing 18% of 6,724, and then whatever you get, you deduct that from 6,724. So you keep on doing that. That's a reducing balance depreciation. We can also use a CAS calculator to do that, just to do the 18% of 10,000 and enter. I'll show you in maybe the next video how to do that on CAS, but you can do like that. Okay, so the next part was what would be the depreciating value after 5 years. So if you keep on doing that table, you will get a value here for 5 years. So that would be your answer. And that is $3,707. Okay, and then the amount of the depreciation in the fourth year. So it's always the amount of depreciation in the fifth year, take away the amount of depreciation in the fourth year. Again, from the table here, when you complete that table. Okay, so then the question was if the photocopier depreciates by 18% per annum, the value of the photocopier in any 1 year is 82%, isn't it? So if it's depreciating by 18% every year, then it means it's keeping its 82% of the value. How we get that? It's 800 take away 18%. So you will be familiar with this recurrence relation a little bit now. So how we represent that in recurrence relation? We use V0 as an initial value, that is $10,000. Then n plus 1 is for the next year. So 0.82 times Vn. So Vn is the original value, that's 10,000. So if we want to calculate the depreciation after first year, so instead of doing that table before, we can do this as well. So we can do 0.82 times 10,000. So that's after 1 year. So after 2 years, we can do 0.82 of that again. In other words, for second year, we can just do 0.82 raised to the power 2 times 10,000. For the third year, we can do raised to the power 3 because it's after 3 years, and so on. So that becomes the recurrence relation. So we have Vn equals 0.8 to n. N is the number of years. If you have to find that for after 5 years, you can just put here 0.82 raised to the power 5 times 10,000. So you'll get your answer. So that is your recurrence relation. That's what you will be using for your reducing balance depreciation. So now if in the question it asks you, okay, so what will be the value after 6 years? So you just substitute 6 here instead of n and you get your answers. Okay, so these are the other parts. So depreciation after 6 years. So after 6 years, you just take away the year 5, take away the year 6, and you will get the answer. So when you do the example, it's in the book all together, it will make more sense. All right, so important thing, the general rule. So before we have just done the recurrence relation. So now here is a general rule. It's always easier to use as a formula, you can say. But remember, if in your SAC or in your exams, they're asking you to make a recurrence relation, you need to go back and use the V0 and Vn, those notations. If they're asking you to do the general rule, so here it is the general formula of calculation, which is Vn equals 1 take away R divided by 100 raised to the power n times V0. So if you look at it, it's another formula for compound interest. When we used to find the compound interest, instead of adding here, we are subtracting that sign. It's minus here. So R is the depreciation rate per time period. So as in the previous question, it was 18%. So you just need to substitute 18 here. So in the CAS calculator, you can just write brackets 1, take away 18 over 100, brackets, and depending upon the question, what it's asking for 5 years, 6 years, that n is your time period, times V0. V0 is the initial value. So that's 10,000 as per the last question. So irrespective of you're using the recurrence relation or you're using the general rule, you still get the same answer, but they are used in two different forms. So you can straight away apply that general rule if in a question you've been asked, okay, what will be the rate of depreciation after 10 years? So you just substitute the rate given here and the number of years here times your original value. So that's how you can use the general formula. So this is really easier, as I said. So in one of the example, the purchase price of a truck is given $250,000 and 8% per annum is a rate of reducing balance depreciation. So you just need to apply that formula. You know your V0 is $250,000. So, and N is 9 years. So they're asking you to find after 9 years. And your rate of interest, that's like depreciation, is 8. So you just substitute one takeaway R, which is 8 over 100 in brackets. You need to find that after 9 years. So you just put 9 here times the original value and you get your answer. That's it. So you need to check in the question whether it's a reducing balance or a flat rate, because there is a difference. So be careful about that in your SAC and exams. All right, I hope that makes sense. You just need to note how to find the recurrence relation over here. Like that's the formula. Whatever the rate of depreciation, take away 100, take away that rate, raised to the power n times V0. That's your recurrence relation. And when you come down to the general formula, here is your general formula. So recurrence relation here as well. So the difference you can see is it's just raised to the power n here, and this one is for like the next year and so on. So try to do the worked example and the prep questions, and keep watching Edrolo videos. There are really good examples with the CAS instructions there. So there is one more question about using the finance solver to find the rate of depreciation or interest. So I will explain you that. Maybe I'll make another video if you need any help. For now, just do the questions and all the prep questions, and let me know if you have any doubts, and follow the instructions in the book for using the finance solver. I hope that makes sense, and keep on posting your questions on Google Classroom, or you can also email me anytime. So I'll try to make a little bit more videos and more explanation. Just let me know, and your feedback as well. What do you think? Okay, thanks. Enjoy your rest of the day. Bye.